All right. Matt, the mortgage guy. In today's video, I'm going to talk about something that doesn't get a lot of publicity in the mortgage world, but this first weekend of June 2022, there's going to be an increase to the area median income numbers published by Fannie Mae and Freddie Mac. It's going to have an effect on certain types of loans. It may have effect on you as a consumer. In this video, I'm going to go into the different loans it's going to affect, the different consumers that might want to check these numbers out and see if there's programs you qualify for. So stay tuned. All right, Matt, the mortgage guy, residential mortgage broker, bringing you up-to-date information about the mortgage world, about real estate, what I'm seeing, hearing, and feeling in the real estate market, and of course, mortgage guidelines that are going to help you. I try to break it down in a fairly easy way to understand. So in today's video, area median income is something that you might think like, what does the area median income have to do with loans? There's certain programs that are out there that to qualify for it, you have to be at a certain income level, right? You have to fit in a certain bucket. Specifically, the ones that people probably know the most about are HomeReady and HomePossible. What are HomeReady and HomePossible? How does that apply to you? Fannie Mae's program is HomeReady. Freddie Mac has HomePossible. It's really geared towards low and moderate income buyers. You can put 3% down. You get a reduced rate and reduced mortgage insurance in a lot of cases. But in order to qualify, you have to be at 80% of the area median income or lower. Hence, why this update, this change this weekend might have an effect on you, right? So knowing that so far, let's just jump in and we'll look at a couple different lookup tools because Fannie Mae and Freddie Mac both have a lookup tool for looking up the area median income for where you're at. I'll link these in the description below. This one is Fannie Mae's. Behind it, I got Freddie Mac's. Relatively straightforward, right? You go to this address, this provided for sole purpose disclaimer. Okay. Type in any address, right? I'll type in my office. And we will see that in Sacramento County, the area median income is $90,000. What you want to make sure you look at is down here, it'll actually give you what 80% is, right? You don't have to do the math on your own. You just get to see it. 80% area median income is $72,720. HomeReady income limit, right? HomeReady and HomePossible are Fannie and Freddie programs. The limit's going to be the same. If you went to Freddie Mac's calculator and did the same thing, you would find the same number. Commons Drive all over the country. I'll do it here and you're going to get, oh, check this out. They might have already increased theirs. This is interesting, right? This is in real time, folks. The median income, 102,400. And back here, we've got 99. It just might be that Freddie Mac is ahead of the game. Let's try it somewhere else and see if they match up here. Los Angeles County. This is going to be muy interesante. This is an updated number as well, I think. Look at you, Freddie Mac, ahead of the game. 97,900, meaning that 80% of it's 78,320. Let's go to Los Angeles County here. I didn't make the video soon enough in anticipation, right? 86,100, Los Angeles County. So check it out. You get to, in real time, see 2022 limits that are changing. In LA, going from 86 to 97. In Sac County, it went from about 90 to 102. So, whatever increase that is, rough math, 14%-ish, these are going up. So if you qualify for HomeReady or HomePossible, look at these numbers, 78,320, a little bit higher in Sacramento County. You might live in a county Marysville, California, that's even lower. You got to fit under this 80% number, right? It's going to be 53,000 in some numbers. But if you fit in that, and you qualify for HomeReady or HomePossible, get with a loan officer you like and trust to explain to you the benefits of these programs. How do I structure it where I can put 3% down as a first-time buyer and get the benefits of HomeReady and HomePossible? What you're also going to find is most all down payment assistance programs are going to be done at the state level. California is no different. California HFA, a lot of their programs are going to be based on this area median income. They're designed for and they're serving the underserved communities, low to moderate income, right? So in order to qualify for them, you're going to have to look at these income guidelines and make sure you qualify. I'm gonna triple check since we double checked Marysville, California, and see if Freddie Mac done updated this one too. 75,000 and 60. 75,000 being 100% income and 80% of it being 60. So that one's been updated as well. Cool. All right. Well, Fannie will get to it by Saturday, by the time this thing goes live. So if you search it, you'll probably find the new numbers, but I'm recording this a few days early on June 2nd. And so yet to be updated. So go in there, check that out, talk to a loan officer about HomeReady and HomePossible. They can offer lower down payment requirements than other types of loans, lower mortgage insurance. That was something I remember used to be a bigger difference. It's not as much now. 100% of the down payment can be gift funds. That's another cool benefit of HomeReady or HomePossible. Know that there's still credit score requirements. You still have to qualify based on a certain debt to income ratio. So fall within the income limits, qualify based on credit and income, and reap the benefits of it. And either that or down payment assistance, this AMI is going to come into play. If you want to talk to me or any of my team, feel free to reach out. Go to greatmortgagebroker.com, fill out the form, let us know where you're at, how we can help, and we'll be in touch shortly. Just on a kind of last note, a lot of buyers are going to be comparing HomeReady and HomePossible 3% down versus FHA 3.5% down. And I've had people ask me, like, which one's better? Should I do FHA? Should I do HomeReady, HomePossible? It really depends on the client, right? We need kind of the full scenario, your credit score, your total liquid funds, things like that to really tell you which one's going to be better. There's some great benefits to HomeReady and HomePossible. It's a great program, but it's not for everybody, right? It might be based on your credit score, total cash available, and other things. FHA might be a better program, but look into it nonetheless. That's what you do when you get yourself pre-approved. You have somebody look at your complete scenario, give you guidance on what might best serve you based on your goals, your needs, your credit profile, all that other stuff. Hopefully this was helpful. Let me know what other stuff you want me to see. This is kind of a, in the weeds type mortgage guideline thing, which I don't know how many people are going to get value out of it. But if you did, I appreciate the thumbs up, subscribe, all that good stuff. Have a good one. Thanks for watching. And until next time, we gonna see.